Hi, welcome to the Stock Scores Market Minutes for August 6th, 2018. This week I'm going to teach you how to draw a trend line, then do my regular weekly market analysis and close off with the trade of the week on BRZU. So how do you draw a trend line? Why do you draw a trend line? Well, trend lines are a very reliable indicator. I use them almost daily in my trading. Stocks that run away from trend lines will usually pull back to them. Stocks that are falling into an upward trend line will usually bounce off of an upward trend line, or if they're in a downward trend, if they're rising in price and they hit that downward trend line, they will encounter resistance and reverse and go lower. So it's really important to know what a trend line is and how to draw it properly. Upward trends are drawn across the inflection point lows. Now I'll show you in a moment what I mean. Downward trend lines are drawn across the inflection point highs. Now, what is an inflection point? Well, it's the point where price changes direction. So if you have price moving down and then it stops going down and starts going up, you have an inflection point low. If it's then moving up and it stops going up and starts going down, you have an inflection point high. And we can draw lines across those to establish the trend line. So the first step then is to identify the inflection points on the chart, and then draw a line that best fits those inflection points, either starting at the high point on the chart or the low point, or at least for the time frame you are considering. So let's look at the charts, and as I go through this week's market analysis, I'll just try to show you how to draw those trend lines. So this is the S&P 500 ETF 30-day 60-minute chart, and let's begin by highlighting some recent inflection points. And these are just the little candles that kind of stick out on the chart, and then I can draw a line across them, and I have established a downward trend line. And you can see that the downward trend line was broken about 2 weeks ago, and prices have been moving up ever since. So then what we want to be able to do is also draw downward trend lines. There's not too many on this chart, but upward trend lines longer term. So we can again start way back here and draw this upward trend line like that. What is it doing? It's cutting across this inflection point and this one and this one. It doesn't have to be exact. You want to find the line that best fits the most inflection points, but there is the upward trend line, which was broken right there, and that really started this period of a number of days on this chart where we had some choppy sideways trading. Now we can apply that same methodology to the longer term chart. So again, look for inflection points. Let's start with this one. That's the low point on this chart, and let's just pick some inflection points on that chart and draw a line across them. And what I like to do is I like to start my line like this and just let it rise up until it hits the lines. So that one was broken right here, and that started some choppy sideways trading. We can take a longer term chart now that we established some new inflection points down here, and we've established that new longer term upward trend. We had a downward sloping trend like this, which we've recently broken, and we are now coming up to the highs on this chart, which is a horizontal line of resistance where we should get stuck. So somewhere around the 280, I think it was 284 or 286 on the SPY, which will be strong resistance. That was the highs from January. We corrected away from them, falling back to the upward trend line. We have since now risen back. We're almost at that horizontal line of resistance again. So the upside is actually fairly limited in the short term. We've got maybe another week of upside until we encounter that resistance. And then it will be a question of, what is it going to take to break through that? So for now, bullish trend, but coming into some resistance. You want to think about that for the next week or two. On the Russell 2000, let's start with some inflection points. So we have one there and there and there. Draw a line, start it there, and just let it rise up until it hits as many points as possible. And you can see that we've established a nice upward trend line, which is held so far. We also have horizontal resistance there. So we have optimism. The reason I say that is because the bottoms are rising as we go from left to right. And we are encountering resistance at the 170 zone. So we're essentially going sideways in the small cap market. And if you like to trade those cheaper stocks that make up the small cap market, you will know that for the last month, 6 weeks, it's been kind of dead. That's because we have been in a sideways trading range in that market. Now, if we can break out through this resistance, then you will see that sector heat up again. I don't think it's going to break in the next week. Why? Because we probably have to come up to that resistance level and get stuck first, and then After stalling, going sideways for a little while, if we can then break out, the buyers will get excited again. What you want to watch for on the negative side is if we break the upward trend line, break down, that would imply prices are headed lower. So for now, optimistic pattern, but needs to break out. Onto the TSX 60, this is the short-term chart. We have a little bit of a downward trend line that is formed. Not substantially a downward trend line, just kind of a drift lower. And you can see that we're just in this slow drift lower, not too far from the resistance of a couple of weeks ago. But you see in the Canadian market just kind of a general lack of buyer motivation. Also don't have considerable seller motivation. I think a lot dependent upon how things work out with the NAFTA negotiations and tariffs and all those sorts of things. If those go good, then you're going to see a breakout in the market. If those continue to be a stall, you're not going to see people want to take positions aggressively on the buy side. Longer term chart of the TSX, it is still in an upward trend. There is our upward trend line. Recently broke through that resistance level. I should draw it a little better. It's more like that. But we're not really getting any traction to the upside. The market had some pretty good gains through April, May, June, then hit resistance, kind of stalling the last few weeks. Buyers are in control. They're just kind of complacent. They need a catalyst to get things going again. Onto the TSX Venture, which is in a downward trend. And again, start with your inflection points and just draw some lines across as many points as you can. That's sort of where it's going to lie. There's your downward trend line. Until that downward trend line is broken, I want you to be pretty cautious with these stocks in the TSX Venture because they're fighting a pessimistic market. Not abnormal for this time of year, but it did start early this year. Usually this market tops out in May and sort of bottoms out September, October. This year it topped out in January, and the large part of that was the cannabis sector, which also topped out in January. And I think a lot of the speculative fever that was going on in the TSX Venture has just sort of died off. I think it may come back in the spring, or pardon me, in the fall, especially as you move toward legalization of cannabis in Canada. On to the Treasury bond market. This, of course, is our proxy for interest rates. There's our downward trend line. Look how reliably it hits those points. It started here. We established a trend line there. It came right up and hit it again and got stuck and moved lower. And so we are building a pessimistic pattern on treasuries, which means a bullish pattern for interest rates. Well, when I say bullish pattern, I don't really mean a good way, because rising interest rates, a lot of people wouldn't consider that a good thing. But this is a pattern building for rising interest rates. Now, it's not going to happen tomorrow, but you are seeing this gradual move towards higher interest rates. And so if you are someone who has a lot of debt, you want to think about starting to reduce that, because the market is showing signs that interest rates want to go up. How much? Hard to say. I don't think it's going to be considerable, but you do have a bias towards higher rates rather than lower rates. On to the US dollar, which has been range bound for a few weeks, but this week it actually broke to the upside, and we have a little bit of an upward trend line there. We broke through this resistance, stalled, and now it looks like we may continue higher. So the US dollar looks like it wants to go up. Not a real strong break. You'll notice volume very light this week, and so I wouldn't consider this a real bullish signal, but it certainly isn't bearish. It is more on the bullish side than not. The gold market still in that downward trend. We've talked about this many weeks in a row, but there's your downward trend line. We're quite far below the downward trend line, but you could argue that we've just made a steeper one now. As that US dollar strengthens, that is bearish for gold, and so I would advise you generally stay away from gold and gold stocks until you can get a break of trend. Opposite for the oil market, despite the strong US dollar, the oil market has been moving higher. There is our upward trend line. We ran away from it, we pulled back, and I'm trying to bounce off of it right now, and that should result in a continuation of this upward sloping channel. I remain bullish of oil until we get a break of the upward trend line on the weekly chart. That hasn't happened yet, so stay bullish of oil, but realize that over the last 4 or 5 weeks, we've had a little bit of a pullback zone, so that market has quieted recently. And onto the fear chart, we had a little spike in fear for kind of one day, but it didn't last. The general trend in fear is down, and that is good if you are a buyer of stocks because it simply means that investors are more likely to be buyers and sellers and not too worried about a lot of volatility in the future, and that makes it easier to be a longer term investor. So my ratings then, bullish on both time frames for the US stock market. We had a little bit of a comeback this week that raised my rating to bullish on the short term. Canadian stocks bullish long term, neutral short term. Gold bearish on both time frames. Oil bullish long term, neutral short term as the market tries to hold that upward trend line. US stocks have shown a good deal of volatility, but on light volume, and that light volume has added to a lot of whipsaw action. We see one day up, one day down, one day up, one day down, making it a little bit hard to be anything more than a day trader right now because the volatility is not trending. It's sort of up, down, up, down. The only time you get trends are intraday during the day. And so if you're a longer term trader, maybe it's a good time to go enjoy the beach. The market will get out of that funk once we come out of the summer, I'm sure. But for now, we got that volatility. Buyers continue to defend the market at support and the trend remains up. So that's a good thing. We are trending higher. You just either have to take a long-term view and hold that long-term trend or a very short-term view and trade the volatility. Canadian stocks are very quiet right now. I think it's a wait and see on the tariff and the NAFTA talks. Oil is holding its upward trend and gold continues in its downward trend. So shy away from gold, maybe look for opportunities in oil. Fear relatively low. On to the trade of the week. And this is a trade in an ETF that I'd never really heard of. This is the Brazilian 3 times leverage ETF. So when the Brazilian market goes up, this goes up 3 times as fast. I found it using my worm strategy, which I'm actually changing the name of to the Stock Scores Day Trader strategy. It fit the rules right on the open this morning. Market was relatively quiet the last few days for the Brazilian market. It gapped up, some strong volume, giving a buy signal. And it just demonstrates how you can apply my day trading strategies to ETFs as well, especially the leverage ones. This one had a great move today, largely because the RR lines were quite tight. And so that meant that the risk reward of this trade was very good. It maxed out at 19 RR and it finished the day at about 15 or 16 RR. So a very nice trade on something that I'd never heard of until today when it came up in my process for finding day trades. All right, well, that has been the Stock Scores Market Minutes for August 6th, 2018. Hopefully you're enjoying the summer. Have a great week in the market. Click on that like button, subscribe to the channel, and most importantly, trade well.